Many traders approach market analysis like a game of flashcards. They believe mastering charts means memorizing standard, perfectly formed visual shapes. When looking for a market reversal, a novice will hunt for subjective visual cues. They look for a bright red or green color or a thick candlestick body that stands out from the noise. By focusing on what a pattern looks like, analysts often overlook the underlying mathematical signals that drive price action. Effective pattern recognition requires filtering through the chaos to identify precise, underlying geometric absolutes. To understand this distinction, we need to examine a frequently misinterpreted setup, the Tweezer reversal pattern. The Japanese analysts who named this pattern drew inspiration from a simple tool. Just as tweezers use distinct prongs to grasp a microscopic object, this pattern relies on two trading periods hitting the exact same price. In this framework, candlestick morphology, color, body size, and wick length, is secondary to the strict mathematical alignment of absolute price extremes over two consecutive periods. By stripping away visual noise and isolating this specific geometric boundary, we can objectively identify moments where the market abruptly rejects a price level. Before analyzing the geometry of the candles themselves, we must establish the macro environment. Reversal patterns require a preceding directional trend to reverse. If you identify these geometric alignments during sideways consolidating market action, the structural integrity of the pattern is absent. You are likely observing a false signal. This graph demonstrates the strict directional prerequisite for a valid tweezer bottom. It requires a sustained downward trajectory that abruptly hits an inflection point. A true tweezer bottom specifically targets the extreme terminus of this macro downtrend. Conversely, a valid tweezer top dreams the steep, sustained upward trajectory that peaks at a sharp inflection point. The tweezer top specifically forms at the apex of a macro uptrend, signaling that buyers have encountered a hard ceiling. The tweezer represents a highly specific two-period reaction to the exhaustion of a macro trend. Once that macro trend is established, we can zoom in on the localized mechanics of the two-period formation. This diagram illustrates the exact mathematical requirement for a tweezer bottom. The absolute lowest tick of two consecutive trading periods must be identical. This identical low provides evidence of a price floor, where downward supply is absorbed by underlying demand. The mechanics operate in reverse for the top of a trend. For a tweezer top, the absolute highest tick of the two consecutive periods must be identically aligned, forming an upper boundary. These consecutive, identical limits mathematically prove a sudden failure by the market to breach newly established levels of support or resistance. Here is where most analysts struggle. The tweezer pattern can visually manifest in up to 12 distinct morphological configurations. If you rely on memorizing one perfect textbook variation, you will misidentify valid setups in live market conditions. This grid displays 12 distinct pairings. The first morphological variable to ignore is candlestick color. Whether the first candle is bearish and the second is bullish, or vice versa, the sequence order within the pairing is mathematically irrelevant. The size of the candle body is also irrelevant. You could have a massive momentum block next to a microscopic doji cross. Even the presence, absence, or length of opposing shadows, the upper wicks on a bottom pattern or lower wicks on a top pattern, does not impact the core signal's validity. To find the true signal, an analyst must strip away this structural visual noise. When the noise fades, a single unifying axiom remains: the absolute mathematical alignment of the highest or lowest tick. A seemingly unbalanced pairing, a massive bearish body dropping next to a tiny neutral cross, functions the same way as a perfectly symmetrical textbook example. True analytical rigor demands eliminating subjective visual bias. You must isolate the strict geometric boundary that defines the price rejection. Once you identify this geometric alignment, the next step is determining the structural strength of that price rejection. To measure that strength, we introduce a critical secondary confirmation variable, market volume. While high volume is not mandatory to classify a tweezer pattern, it acts as a mechanical multiplier for the probability of the signal. This diagram illustrates an ideal setup. You are looking for an elevated spike in volume occurring precisely on the second candle of the tweezer pair. That volume spike indicates a high concentration of aggressive, counter-trend market participants stepping in to defend that exact absolute limit. When perfect geometric alignment meets elevated market volume, the pattern transitions from a structural anomaly to an actionable inflection point. Now we can view this validated pattern within the macro context of live market mechanics. When a tweezer rejection is confirmed at these extremes, the preceding trend often loses momentum and the price trajectory shifts in the opposite direction. Analysts fail when they prioritize perfect visual shapes over absolute price limits. The tweezer principle is an objective geometric study in two-period price rejection. By ignoring morphological noise and demanding absolute mathematical alignment within a confirmed trend, you can extract the true signal from market chaos and pinpoint moments of trend exhaustion.